Over the last few months, a massive wave of crypto capital has routed directly into the Hyperliquid ecosystem. In the middle of that surge, the PURR token launched under highly unusual conditions. There was no presale, and the developers reserved 0 tokens for themselves. Driven by speculation, the asset hit a market capitalization of over $60 million shortly after launch. Today, the situation has reversed. The token is trading 83% below that peak. This creates a specific dilemma for anyone watching the chart. You have to decide if this drawdown represents a steep discount on a major ecosystem asset or a project simply trapping new money. To figure that out, we have to look at what the token actually does. PURR is a meme token operating on Hyperliquid's Layer 1 blockchain, rather than a utility coin with technical functions. It was built and deployed by the Hyperliquid team themselves, which means the token's perception is tied directly to the reputation of the platform's developers. That association comes with specific trade-offs. The asset has no DeFi function, no staking rewards, and no future roadmap promises. Without an internal use case, the token functions as a speculative proxy. You buy it to bet on the amount of attention flowing into the broader Hyperliquid ecosystem. An investment here is a narrative momentum play. It requires a different risk management strategy than a project generating actual protocol revenue. A major part of that strategy involves the supply metrics, starting with the maximum cap of 1 billion PURR tokens. This block diagram represents the total supply at launch. 400 million tokens were permanently burned immediately, reducing circulating supply to 600 million. That destruction continues today. Every trading fee paid is automatically destroyed. This constant burning creates persistent, measurable deflationary pressure on the asset over time. Even with this shrinking supply, the market cap has found an equilibrium around $68 million. Trading volume is concentrated across Coinbase, the centralized exchange KuCoin, and Hyperliquid's native decentralized exchange. While a deflationary supply looks attractive on a spreadsheet, it can become a trap if you assume that scarcity alone creates value. The reality is that deflationary mechanics only drive up prices if the baseline demand remains constant or grows. Because PURR has no utility, there is no structural requirement for anyone to hold it. There is nothing to offset a lack of new buyers when interest fades. In periods of low interest, token burns cannot sustain a market cap. Destroying tokens doesn't help if no one is competing to buy the ones that remain. Burn mechanisms provide no support if the broader market sentiment shifts away from the narrative. This chart shows the result of that sentiment shift. After a sharp spike, the price peaked at 69 cents back in December 2024. From there, the price collapsed 83%, reaching the current floor of 11 cents. Sentiment at these levels is bearish. We see very thin trading volume, indicating that few buyers are stepping in to support the price. For those looking for a recovery, the key resistance level to watch is the 20-cent mark. Reclaiming it would signal that buyers are actually overcoming the current selling pressure. Buying into this drawdown before a reclaim of 20 cents is an attempt to catch a falling knife. The bullish case rests on the burn mechanism and the direct ties to a prominent Layer 1 brand. The bearish reality is that the token lacks utility, has lost significant value, and suffers from low liquidity. When you look at the data, the path forward depends on your goals. Fundamental investors have no reason to be here. For narrative speculators, the token serves only as a high-risk gauge of ecosystem hype. The verdict is to keep this token on a watch list rather than taking a position immediately. Brand prestige and early hype cannot replace actual utility when establishing a price floor in a bear market. You can wait for the 20-cent reclaim and miss the absolute bottom, or buy at 11 cents and risk further losses. Protecting capital from assets with low volume and no utility is generally more important than trying to pick a speculative bottom. This is a speculative breakdown, not financial advice. Always perform your own research before trading. Like this video, subscribe for more breakdowns, and leave a comment below letting us know if you are bullish or bearish on this asset. It comes down to one question: is the Hyperliquid brand strong enough to revive a meme token with no utility?